Hey friends, welcome back to the Investing Iguana, your Kopitiam-style guide to growing wealth in Singapore markets. Let's talk about a stock that's making waves both literally and figuratively in our backyard, Seatrium at $2.50. Now I know what you're thinking, another marine stock, didn't we learn from the offshore and marine crash last decade? But hold your Tarek because this isn't your Kong's rig building company anymore. Imagine Changi Airport suddenly started handling space rockets alongside regular planes. That's essentially what Seatrium's doing, balancing traditional oil platforms with massive wind farms. At $2.50 per share, some analysts say this Temasek-backed giant could be Singapore's ticket to lead Asia's green energy transition. But is it worth your hard-earned CPF investment savings? Let's break it down like we're inspecting a second-hand car at Turf City. Check the engine, kick the tires, and see if the price matches the value. First, the technical picture. If stock charts were MRT maps, Seatrium's currently on the east-west line moving steadily towards Pasir Ris. Since November last year, it's been forming what traders call an ascending channel. Think of it as climbing a staircase where each step is higher than the last. The current price around $2.50 sits comfortably in the middle of this channel, with room to climb about 7% to $2.72 before hitting resistance. The relative strength index at 47 is like having half a tank of petrol. Not empty, but not full enough for a road trip to Kuala Lumpur either. Now let's talk about the 500-pound gorilla in the room, Temasek's 50% stake. This isn't just some passive investment. Think of it like having the head chef from Tian Tian Chicken Rice supervising your home kitchen. There's serious skin in the game. With Singapore committing $15 billion to green energy by 2030, that's 3 times what we spent building Marina Bay Sands, Seatrium's wind farm projects suddenly look as strategic as our water agreements with Malaysia. They're currently building 4 offshore wind projects in Europe that could power 2 million HDB flats. That's almost every public housing unit in Singapore. Here's where it gets exciting. Last month's $900 million BP contract for a Gulf of Mexico floating production unit wasn't just any project. Picture assembling IKEA furniture, but in the middle of the ocean, with pieces heavier than 10 MRT trains combined. This single contract caused the stock to jump 10% overnight, the kind of move that makes Grab's IPO look tame. It proves Seatrium can play in the big leagues of deep water engineering, which is crucial as oil majors keep drilling despite the green transition. But let's not get carried away like Auntie at a Sheng Siong sale. This $3.1 billion debt is real. That's like owing 36% of your HDB flat's value in mortgage. Manageable if you've got stable income, but risky if your spouse loses their job. Oil prices dropping 10% this year adds pressure, though their growing wind energy backlog acts like a financial life jacket. Their price-to-sales ratio of 1x is higher than the industry's 0.6x average. You're paying more per dollar of sales compared to competitors, but getting Temasek's backing as a bonus. So how should Singaporean investors approach this? If you're the type who checks your CPF daily, maybe allocate 2 to 3% of your portfolio, like choosing one solid kueh from a diverse tray. Technical traders might aim for that $2.72 short-term target, equivalent to the profit you'd make flipping a rare Pokemon card. Long-term investors? You're essentially buying into Singapore's blueprint to become the Rotterdam of Asia, a green energy hub where wind turbines are the new oil rigs. Let's take the Valley Rig project as a real-life example. By completing it early, Seatrium didn't just save on costs. They also impress bore drilling, much like how we impress our bosses by finishing projects ahead of time. This efficiency has a direct impact on their bottom line, similar to how efficiently managing our CPF contributions can lead to a better retirement fund. In 2025, with the CPF rules still emphasizing on retirement adequacy, this kind of financial efficiency is something we should all aim for in our personal finances. But there are things to keep in mind. Seatrium operates in sectors that are sensitive to global commodity prices and environmental regulations, which can be as unpredictable as our tropical weather. Their profit margins are slim, and there's been a trend of analysts lowering their earnings per share (EPS) expectations. It's like trying to predict when the rain will stop in our climate. You can never be too sure. Plus, broader economic policies in Singapore, like changes to CPF rules or economic stimuli, could impact sectors like marine and energy, which in turn affects Seatrium's stock performance. So, should you buy Seatrium at $2.50? Here's what you need to think about. It has potential, but it's crucial to weigh the risks against the rewards. Consider your investment horizon, your risk tolerance, and the current economic climate here in Singapore. It's like deciding whether to invest in an umbrella or a raincoat. Both protect you from the rain, but which one suits your needs better? If you're young and can handle a bit of rain, maybe you go for the long-term investment. If you're closer to retirement, perhaps you prefer the immediate protection of a raincoat. Before you click that buy button, do your homework like you're inspecting a resale flat. Monitor 3 things monthly: oil price trends, our version of checking the weather forecast, new contract announcements, their menu updates, and debt reduction progress, their renovation fund. The negative PE ratio means profits aren't here yet, but analysts predict break-even by late 2025, about the same timeline as when your BTO flat will be ready. At $2.50, you're paying less than the cost of 2 Michelin-starred chicken rice meals for a share in Singapore's maritime ambitions. Will it be smooth sailing? Probably not. Expect choppy waters like our Johor Strait ferry rides. But with Temasek at the helm and green energy tailwinds, this could be our generation's chance to own a piece of Singapore Inc.'s next chapter. And that's our deep dive into Seatrium today. Keep watching, keep learning, and let's grow our wealth together in this vibrant city of ours. Remember, the key is to stay informed, adapt to changes, and engage with the community. Singapore's investment landscape is as dynamic as our city-state itself, and being part of this journey is what makes it exciting.